We've seen a little bit of weakness on the Australian share market as the banks drag down the blue chip index, but the mid cap index and the small cap index have managed a rise on the market. Of course, all eyes have been on Rio Tinto's result, which has dropped after the bell, and on first impressions it does look like it's been a disappointing one. Underlying earnings coming in at $9.19 billion US dollars. That's weaker than market expectations, which was expecting $9.6 billion as consensus. Also, the dividend has been softer than expected. The dividend consensus was at $1.41 US. It's coming at $1.27 US. But Rio Tinto announcing a $1 billion buyback. Having a look across the divisions, and iron ore has been strong as expected, but it looks like aluminium has been the weakest link there, detracting away from its underlying earnings result and coming in lower than consensus. We've seen copper as well as energy pretty much bang in line with expectations. So altogether, it does look like we are expecting to see perhaps some profit taking in Rio Tinto's shares in London and the US on the back of these numbers. Of course, we've also been watching some other results on the market today, and Janus Henderson unfortunately has been a disappointing one. Its stock falling more than 8% on the market. What we have seen is outflows impacting on the result, and that's been a negative for Janus Henderson. We've seen those positive markets and strong performance offset by the net outflows as well as FX losses. And of course, currency is important given that 95% of revenue from Janus Henderson is in US dollars. Having a look at some others, and we've also seen Genworth coming out. The first half we saw net earned premium down 32.3%, and that was quite weak. Although if we have a look at the second quarter compared to the first quarter, I guess we have seen those losses moderating. In the first quarter, we did see net earned premium down 37.5%. In the second quarter, we saw it down 32.3%, and we actually saw Genworth shares higher today, up by around about 4%. So all in all, the Australian share market, although it looks slightly weaker, mainly caused by the weakness that we've seen in the banks, and we actually saw some strength coming through in the mid cap and the small cap indices today.